Okay, recording this video after close trade Monday 28th of September 2015, and before getting to the charts, I gotta say I feel pretty good today. Feel good because we've just celebrated the 9-year anniversary of Emini-Watch, which is quite an achievement really. You know, blogs mostly kind of die out after 6 or 9 months or something like that. And Emini-Watch now has been going for 1,187 posts. And I got to tell you, I really do love kind of blogging on the site. I feel as if I've got a little bit to contribute to kind of the trading world. Plus, there's so many people that email me and say, you know, they really appreciate what I do. So thank you for everybody who's supported the site over the years. Just so you know, the site regularly now gets 800 plus visitors every day of the week. And on the days that I post a video or add something to the site, it kind of bumps up to 1,500 or more kind of visitors on the site, which is pretty cool. Anyway, so happy 9-year anniversary to Emini-Watch. So the charts, and we had a doozy today, Monday. First of all, we got to talk about MDP 3.0 and TradeStation release of the data. So this is this whole business of the new data protocol that's coming out of the CME, which kind of generated quite a lot of discussion. I wouldn't say controversy over the last few months, but certainly discussion as to what it means. And so far, I don't think a lot has changed. So this is the chart I've been saying I would keep an eye on to see if it makes a big difference. This is the daily chart, the E-mini, and using a 40-minute chart I can calculate the average trade size, and I've shown you how to do this in a previous video a couple of months ago. And this is the plot of the average trade size, and you can see up till, what is that, about a month ago, we had a fairly consistent 3.25, something like that, contracts per trade kind of going on. And then all of a sudden something weird kind of happened. We had this kind of shift down, particularly it kind of hit with the sell-off in the market. In some respects, it's not unusual when you do see big hits like this to the market. The average trade size actually does kind of drop because you tend to see far more kind of amateur trades kind of going through for whatever reasons. I'm not sure whether the amateurs kind of get involved or start kind of panicking during these kind of periods, or the professionals just gobble up all of the amateur trades and they're kind of less willing to kind of stand around and wait for kind of good entries. They just kind of gobble up and kind of get involved. But anyway, we did have this shift down. What we should be seeing though is if there's a real kind of change in the bundling of the data, is that the average trade size should move up. You know, we'd have thought certainly more than what we've had recently, and maybe above this kind of 3.25 kind of average that we've had kind of recently. And you can see with today's activity, with supposedly this new data protocol, kind of no change. So I'm going to be hunting around the forums to see if anybody else has had anything to say about this, if it's kind of made any difference. So far, kind of nothing going on. So that's the average trade size. You know, not a lot to report there. The other question is, you know, has it made a difference to Better Pro-Am, which is measuring the average trade size and identifying professional and amateur trade. So this is the 4500 tip bar chart of the E-mini. This is the overnight session. This is the Sunday evening into Monday's open. Here's Monday's open, and we've got Better Pro-Am. So we've got the amateurs with yellow bars, we've got the professionals with blue bars, and you can see on this retrace here into this pullback resistance, there's a couple of blue professional bars, exactly what we'd expect. We then kind of break down through this 1893-95 kind of level here. This is falling through the ice. So that is a previous support. They got short here. And then in order to get this move really going to the downside, that was a blue professional bar falling through the ice, exhaustion sell kind of getting that move going into this next leg down, and then they kind of took profits down here, blue professional bars coming out the lows. That's nice on this little retrace, blue professional bar at this low, blue professional bars stepping in, taking profits. Again, they're taking profits. There are the poor old amateurs, Rambo pattern, kind of down at the bottom, thinking this move's going to continue. They get kind of wrong-footed down there, and the market just settled into the end of the day. So, you know, everything that I'm looking at, my charts in terms of Better Pro-Am, kind of looks right. Everything's happening at the right place. Nothing's kind of untoward. You know, the amateurs kind of getting wrong-footed various spots. So that's kind of looking good. I must admit, though, during today's activity, it felt a little funky. You know, the tick bar charts weren't moving quite how they normally feel. If you felt the same thing, please email me. I don't know how to, other than, you know, putting Better Pro-Am to kind of measure that, but it just felt a little bit more jittery. Sometimes I've felt that when a high frequency trader has turned on an algorithm or turned off an algorithm, the character of the tick bar charts just changed a little bit, the way it kind of moved around, and it did feel a little bit kind of odd in a couple of instances this morning, particularly after about the first 15 minutes. There was a whole sequence at the beginning of the day that was all of a sudden just weirdo, kind of freaked me out, and just kind of messed with my head a bit. It kind of looked a little bit odd. Anyway, I'm rambling. If you felt the same thing, that things kind of felt a little bit different today, please email me. And so where are we? Well, we had a bloody big downtrend move, from Friday's close at 1919 or whatever it was down to these 1870s. We're talking almost 50 points, kind of top to bottom range here, which is just spectacular. And of course, it falls in line with the cyclical weakness that we should be expecting. So here is the September effect. This is exactly 1 year ago, this blue vertical line. The seasonality kind of indicator. It's free on the site. Go check it out. Go download it. Go use it. Make sure you've loaded the data correctly, though, for God's sakes. The indicator needs you to start the data with a decent amount of data, so I'd look for at least 10 years of data on the chart, and then start the chart on the 1st of January, the first trading day of the year, and that way it'll calculate correctly. Anyway, there are instructions on the site. Do pay attention to those. This is the seasonal weakness, September effect, that we should be expecting here, which is, even though this line is moving up at this point here, it just means that these are negative days. They're just less negative days than we had kind of previously. So this little forecast showing us what we're going to see in the next couple of days based on historically what's happened over this time period. It goes kind of positive. Let me just bump this up a little bit. So the next couple of days should be kind of negative, and then it kind of goes positive after there. So it's kind of interesting, and we're kind of testing back down into those previous lows as to what did we get to? Is it about 1821, which is kind of cool. So that's the seasonal weakness that's kind of come in at the moment, and so you should not have been surprised that Friday's trade was a really weak rally, and then all of a sudden the rally just gave way in the afternoon. When the market does not do what it's supposed to do, when a rally kind of gives way, then it's going in the other direction. And so we had weakness coming from Friday's afternoon kind of trade into Monday, and when it fell off kind of out of bed here at 1900, well, that was kind of, I don't want to say obvious, but it was not unexpected. Anyway, so where are we in terms of things? And what we are playing down is pullback to end of trend on the daily chart, and I'll show you this on a whole bunch of indices, but here we go. Pullback resistance came in at 2000. We're running out, pullback to end of trend. Remember this bullish divergence signal that we had here, very close, almost on the zero line here. So I say, well, that wait for like a flush pattern, a bigger kind of dip down, and that's what we're getting at the moment. Better momentum is kind of chasing down almost the kind of exhaustion pattern that we had before. Today's activity, tomorrow's activity, going to be absolutely key. We're going to be kind of testing into those lows. Are they going to hold? Are we going to get another kind of big sell-off pattern to put in a flush pattern or something like that in order to hold this move kind of temporarily at least into pullback to end of trend? Because that'll be some form of support that comes in at that point. I always like to back those up when we got on the lowest time frame, the 45-minute chart compared to the daily chart. On the 45, seeing pullback to end of trends. And you can see the last little pullback that we had, pullback to end of trend sequence that we had into Thursday, that was not a valid pullback to end of trend because we didn't have exhaustion patterns on the downside. All the exhaustion patterns were happening here, bearish divergence, flush patterns going on here. We did not have exhaustion patterns on the end of trend. So yeah, it held us up temporarily. It was a price pattern, but it wasn't everything coming together. It wasn't better pro-am, better momentum, better sine wave, non-correlated indicators all coming together. Now we've had an exhaustion pattern kind of getting this move going. We've got to probably see another pullback to end of trend, and we're way below this support on the 135-minute chart. So we're probably going to have to put in pullback to end of trend. So we are not done on the downside. We've got to test into where that's kind of going. Now, I'm going to show you this pullback to end of trend on all the indices because that's what we're kind of showing. This is the Dow, so you can see the sequence pullback to end of trend, and we're waiting for that cyclical support to kind of come in. That will hold us up for a bit, so we'll have a little bit of resting at that point, and then it's a question of, is that enough? Is that enough to hold us up and kind of reverse the trend and go the other way? We'll have to wait and see, but that's the next kind of leg down. So we're coming into that, and this is the Russell, same deal. You can see the cyclical supports coming in, pull back to end of trend. Russell went even further than the last low with a big blue professional down bar, and you can see that reading there is pretty extreme as well, signaling a flush or something. So let's see what goes on. S&P 500, just like the E-mini. So there we go, cyclical cross coming, pull back to end of trend, kind of coming down on that move, and the Nasdaq, same deal, pull back to end of trend, bang. So all of those patterns were showing up together. It was showing a cyclical weakness, setting up from the week before. It was kind of, we've got to go to test those things, and let's see then after we have that end of trend kind of come in, and once we get a bounce at that point, what kind of goes on. My kind of bearishness comes from the fact that we're breaking down on multiple time frames. This is the multiple time frame view, and I've been showing you this chart over the last. Look at this. We're just continuing to kind of come down today because this is a continuous chart, and we're kind of the market's kind of open after market and just coming down to those lows. So here's the pullback to end of trend's got to work out on the lowest time frame, so that daily chart. You can see all that weakness coming in with the trending activity here, showing a down move. We have to go then the intermediate time frame, this next one here, because we've broken down below that intermediate time frame. That's got to go pull back to end of trend. So that's why I think this move is going to be a little bit bigger than we've kind of seen from these spikes. And again, I'm just kind of reiterating what I've said before. Previous spikes down that we've had, we've been caught when cyclical support kind of comes in on the next highest time frame. The difference here is we've broken both of those lowest and intermediate time frames, so that means we have to go chase pull back to end of trend on the intermediate time frame. So that's what's kind of interesting, what's going on at the moment. So here's the long-term tick bar charts. This is starting with a 4500 tick bar chart with this multiple time frame view. Let me just show you where the open of Monday's activity was. This is Friday into the weakness that we had on Friday that kind of gave way, and then we followed it up on Monday. And you can see this is the Friday's activity. When the Friday kind of gave way and it didn't work out into a reversal day and just lost the plot at the end of the day, that's when you got to get worried. And so with this thing set up with a nice little low risk entry point on this highest time frame chart, that's what I look for here. And when we get confirmation, when we start breaking 2 time frames like that, that is a pretty pattern. So we get the initial weakness, which shows with some initial breaks of support for a downtrend. We get a low risk entry point here, that's that little signal, and then we get confirmation when it starts to break down in the next 2 time frames, ideally simultaneously. We know that this is a good kind of trending move, and you can see that kind of confirmation break was happening here, and it was down the whole way through. So we've had one pullback to end of trend on the 4500 tip bar chart. We got to ripple through. We're through support. The last support on the intermediate time frame, the 13,500, was way up here. So we got to run through pullback to end of trend on that intermediate time frame, and then we're way through supports on the highest time frame there on the 40,500 tip bar chart. So we've got to run pullback to end of trend. So all of that activity, we've had one exhaustion pattern kind of show up here, one exhaustion sell. But we've got to put in all of those pullbacks to end of trend. So do not be in a hurry to kind of get long into this move. This is not over until we start to see those. So that's kind of cool. Today's activity, well, it was nice. I will put on another video because I had a really nice trade, got into a trending move. I said at the beginning of the day, kind of acted a little bit weird. It was almost after the first 15 minutes, something kind of funky happened. I was short initially, got taken out. Not taken out, I decided to reverse and go long. Then it looked kind of a little bit weird, didn't kind of go my way, and immediately we had a lot of weakness kind of come in. And so I was down 3.5 points after 2 trades, and then all of a sudden it just broke into this beautiful kind of trending move on the way down. Kind of got on board that and took 9 points out of that, so I was quite happy with that. But it was a classic, and you could see it kind of breaking down. These charts are so slow to move now on tip bar charts. TradeStation did something last year where they just, the charts used to move a lot quicker when you were doing that. But anyway, just look at all this weakness that came in. Resistance kind of comes in. We're breaking supports into a downtrend, down, and then because we've broken through support on this highest time frame, we've got to go pull back to end of trend on this highest time frame. Bang bang, it takes us out at the beginning of the day, at the end of the day, right down here into these lows. So it was a beautiful thing. Anyway, I hope your trading is going well. I hope you're jumping on board these moves. Don't need to show you that, but yeah, we're breaking down at those afternights, down into 69. So the Asian markets are well open now. Anyway, that's enough for me. Prattling on. I hope your trading's going well, and yeah, keep your wits about you.